What are the worst AI ETFs to avoid? All of them. Don't touch any of them with a 10-foot pole unless you enjoy losing your money and underperforming the market. I'll show you why that is and give you a better alternative.
But Jarrad, I can make so much money because this is the future.
Oh, really? Just like blockchain ETFs, clean energy ETFs, fintech ETFs, a report of the week food ETF, space ETFs, robot ETFs, cybersecurity ETFs, or metaverse ETFs? Let me guess, it's different this time with AI ETFs, right? I assure you, my friends, it is not different this time. The next greatest theme-based ETF is about as common as Christmas. They come and they go, but there's still thousands and thousands of investors who participate. With our short attention spans, it's easy to lose track of all of these trendy funds that have popped up over the past few years. The good news is that we can look back about 70 years to the 1950s when thematic funds started popping up. And that's because it is very easy to sell the future. Just so we're all on the same page, a thematic ETF is a fund that holds a basket of stocks based on a specific theme. Think of it like a general sector fund, but even more niche, or niche, however you pronounce it, since some of them will invest across multiple sectors. Here's an example of some of the stocks an AI ETF holds. I have no idea what half of these companies have to do with AI, but the fund manager, for whatever reason, thinks that these are all winners. Someone should probably tell this ETF manager that this isn't the Iron Man and Batman Marvel technologies. First, let me give thematic ETFs credit. If you're a little hesitant to invest in individual stocks, but still want exposure to that part of the market, then they are a really good solution. Unfortunately, that comes with a lot of downsides that are rarely talked about by the people who pump these things up. AI and other fatty theme-based ETFs thrive on hype, and what I would consider to be that get-rich-quick side of our brains. To prove this point, we have to look no further than how dollars flow into these types of funds. Here's a chart of the fund flows since 2013. As the market was skyrocketing in 2020 and 2021, investors were looking for every penny under their couch to shove into these funds, up until the market started to decline and investors stopped putting money into them in 2022. What happened? I thought the stocks in these funds were the future, bro. If theme-based ETFs are so terrible, then why in the world would new ones continue popping up all over the place? Because they are extremely profitable, since they charge very high fees and play on your emotions about the future. Have you ever thrown spaghetti against a wall to see if it sticks? Neither have I, because I don't want to ruin my walls. But I hear it's a lot of fun. It's the same idea with these ETFs. Most of them know that the odds of success are very low, but as long as they can stay open long enough to suck money out of investors' pockets, it's going to be a net win for them. How big of a win? According to Morningstar, as of 2021, global thematic funds has $806 billion in assets under management. Now, I pulled the expense ratio of 50 of these ETFs, and based on the 0.68% average price, that is a yearly income for the industry of $5.4 billion with a B. With this much money up for grabs, every single wall in my house and my friends' houses would be covered in spaghetti if I were them. These ETFs are money-making machines and basically only exist to make the fund companies rich and you poor. The people who invest in them are the definition of dumb money. Jack Bogle once wrote, "In the casino, the house always wins. In horse racing, the track always wins. In the Powerball lottery, the state always wins. Investing is no different. In the game of investing, the financial industry always wins, and the investors as a group lose." Like I always say, incentives drive behavior. The more funds they can create, the more money that they can make. You have better odds of walking down the street and getting pooped on by a bird while you step in gum on the sidewalk than you are to make money in this kind of ETF. Okay, you caught me, I just made that up. But either way, the odds an investor will successfully pick a thematic ETF that will survive and outperform is really bad. Morningstar found that over a 15-year period, 78% of all thematic funds were liquidated or merged because they either performed terribly or they couldn't get enough people to invest in them. Another 12% survived but lagged the global market index, and a little less than 10% both survived and outperformed the global stock market benchmark. Think about this for a second. That is a 90% failure rate. In what world would you want to be a customer of a product that had a 90% failure rate and that charged you 22 times more than a simple index-based ETF. Except in this case, we're not talking about a normal consumer product. We're talking about you basically gambling with your hard-earned money and financial future. Investing is more about probabilities than it is possibilities. Is it possible for you to invest in, say, an AI or other theme-based ETF and outperform? Absolutely. But it's not very likely, especially over long periods of time. Luck masquerades itself as skill in the short term, but reveals itself over the long term. Some of you may have been lucky up to this point by investing in a theme-based ETF, so you might want to potentially think about taking that W and getting out while you're still ahead. Please help support my little dog Molly as well as this channel by hitting that thumbs up button and sharing the video with someone you think needs to see it. If we look at this graph and zero in on the 3-year time frame, we see that a little over 50% of those funds outperformed. Some of you might be wondering, what's the harm in investing in one of these things for the short term to try to gain an edge? You could, but then we have to get into the conversation of market timing. When do you get into that ETF to outperform? How do you know when to sell at the right time so that you will end up outperforming? How do you know which ETF will outperform before it actually does? There's so many variables, and you have to get it 100% correct in all 3 of those areas to make money. Plus, what's the potential upside? A few percentages of outperformance one time? Cool story, bro. How much did you really make? A few hundred or a few $1,000s? I'd bet most of you aren't investing large enough amounts of money for this outperformance to even positively impact your portfolio. But the downside is worse. Not just for the fact that there's a high likelihood that you'll end up underperforming the market, but because losing money hurts more than making money feels good. We also have to remember that these ETFs typically hold a relatively small number of stocks focused on a specific theme. Of the random 50 that I pulled data on, the average holding was 95 and the median was 78. This limited diversification means that you're introducing additional levels of risk to your overall portfolio, since more of your money is concentrated into a small number of companies within the fund. Sure, you can add one of these ETFs to an already diversified portfolio, but if you had a properly diversified portfolio to begin with, then you already have exposure to every stock that you'd find in it. By putting money into one of these ETFs, you're actually overexposing yourself to those stocks and reducing your diversification, which is automatically going to increase your risk. Based on all of the research and data that I've looked at, theme-based ETFs are not worth it. The best alternative to a thematic ETF of any kind is a simple, broad-based portfolio mix like a total US stock fund and total international stock fund, which I go through in this video linked above my head and down in the description below. Holding these 2 funds already has you invested in any company that's either directly related to a theme or will benefit from it in another way. It's okay to believe that something is going to change the world and not invest into it directly, especially when you don't actually know how things are going to turn out, which most people don't because we can't see into the future. I'm someone who is a firm believer in the benefits of mushrooms. I have had enough experiences with them and know other people who have as well, to the point where I think it could change the world, but there's no way in heck that I would ever invest in that type of theme-based ETF. Between now and the day that you stop investing, you're going to get thematic funds marketed to you because they paint such a bright future. Herds of people will sing the praises of them and pile in hand over fist. The madness of crowds will consume everyone around you. It might even get to the point where you start thinking that you're crazy for not investing at least a little bit of money into it. When this happens, I want you to remember what Jack Bogle once said. Don't do something, just stand there. You don't have to hop on every single freaking trend that pops up. You have my permission to sit back on the sidelines and watch everyone act like a bunch of sheep. You can also feel comfortable not putting your money into these funds because you understand that the high risk isn't worth the low potential reward. At the end of the day, what's going to make you rich is getting out there, earning more money, shoving that money into a diversified portfolio that holds a little bit of everything across the world, then repeat the process over and over and over again. Check out my top 5 ETFs in this video to your left. More ways to help you with your